All right, let's look at the Japanese yen. This market I've identified as being set up for short if we get a confirmed trend change on the daily. Just to reiterate, we do not just blindly short this market. We need to see a confirmed trend change on the daily. These are not timing tools that I'm showing you. We wait for a confirmation on the daily to the downside in order to get involved. And until then, we do nothing. So to start with, we look at the commercials. So over here, we see the commercials relative to their last 6 months of positioning, very bearish positioning. That's check mark number one. Now let's take a look at open interest and net positioning. So this is pretty wild. This huge move up has seen, a few weeks ago, commercials were the most long they had been in the last 3 years, or I don't know if it's all time, but it's definitely in the last 3 years, which is what I usually look at. And then this whole move up, they actually switched to being basically almost max short of the last 3 years. If they get down to here in their short positioning, it'll be max short of the last 3 years. It'll be a major extreme. So basically, we've seen open interest increasing on this up move, generally speaking, while so when open interest is increasing, we need to ask the question, who is causing the open interest increase? And we can see that it's not the commercials. If we look at this here, we see the blue line is the large specs. So the large specs and the public have actually been causing this open interest increase, while the commercials have been getting out. So that is a bearish signal. Eventually we can expect this market to have it turn down if we get that confirmed trend change. And we also have valuation in support of our trade idea. So we see here Japanese yen is overvalued relative to the price of gold and treasuries. So that's another check mark for a short. And we're overbought on the stochastic, and that's not that's a supplementary indicator. I don't look at that as a main indicator. We also have divergence in a momentum that is not confirmed yet. So momentum making higher highs, price lower high. So if we get close below this level on the momentum on the weekly, then that'd be a shift in momentum to the downside. So we also have true seasonal is supportive of our trade idea right here. True seasonal, we can see it's overall to go down until the early first week of October, and a major low put in end of October. So let's look at what the small specs are doing. So these guys are generally very wrong. So they're very long right now relative to the last 6 months of positioning. So that's bearish. They're also overall, basically the last time they were this long was back in February of 2021. So it's when they get to these extremes in long positioning, generally it's a good time to short. We want to fade the public. So that's supportive of our short. We also have one supplementary indicator, which is, I believe, the percent R. Yeah, percent R in a sell zone as well. So we've got a lot of reasons to go short this market. I know there's a lot of talk about the unwind of the Japanese yen carry trade and all these things. And I mean, I don't really, I look at that stuff, but I'm not factoring that into my decision for this trade. The yen, along with a handful of other currencies, were set up for shorts, and the dollar set up for a long. I ended up identifying the yen, the CAD, the Aussie, and the Swiss franc is the ones I want to focus on. And I might narrow that down as the week goes on, but whichever one has that confirmed trend change to the downside first, I'll probably just go with that one. So that is my reasoning for looking to short the yen. If you have questions about the commitment to trader strategy, feel free to shoot me a message. Have a great week and good luck and good trading.